Producer Price Index, which measures how much wholesale goods cost, rose for September. Wholesale prices increased 0.5%. That's slightly higher than the 0.3% some experts predicted. More than 40% of the increase can be attributed to a rise in energy costs. So joining us here in Studio 57 is business journalist Kristin Myers. Kristin, good to see you.
Morning.
So help us break down the significance of today's number.
Yeah, so PPI is, as you were just mentioning, wholesale inflation. And a lot of folks and a lot of investors really kind of look at it as almost a leading indicator on where CPI, which is a measure of inflation, we're going to be getting that tomorrow morning at 8:30 in the morning, where that is going to be going. Now, PPI does not necessarily equal CPI, but those two indices tend to move together. So we tend to see if PPI rises, CPI tends to also rise. And CPI is that big number tomorrow that a lot of investors, a lot of folks are concerned about because it's going to determine what the Fed does next when it comes to those interest rate hikes.
Right, because just because wholesalers are paying more doesn't mean they'll necessarily pass it on to the consumer.
Correct.
But based on the way we've been shopping, they probably will, because we seem very willing to spend.
We have been seeing some of the pass-through of those prices. And again, just because PPI in September goes up does not necessarily mean it goes up in September. You could see some of those changes coming through in a couple of months.
All right. So in the meantime, the Dow has finished positive the past few days since the war in Israel and between Israel and Hamas. How does the stock market typically fare during times of conflict like this?
Yeah, typically markets tend to actually look past conflict. And this time has really been no different. Of course, we haven't had the opening bell yet. That's coming, just in a couple of minutes now. I did look at futures, however, they are up now. The one big caveat to this, of course, is oil, which investors and markets absolutely do care about. Now, neither Israel nor Palestine are these major oil-producing countries. However, Iran is. It is a part of OPEC, and Iran typically backs Hamas. So we have to see how this conflict continues going forward. If we see other countries decide to get involved, we could see oil prices go up. They have fallen to lower than $90 a barrel. But if those third-party actors get involved, then we could see those oil prices tick upward, and markets are definitely going to react. Just as a quick kind of, not preview, but just to tell you what investors right now are expecting. As I mentioned, those crude prices have been falling. And so what we're pretty much seeing is that investors are essentially saying, we are anticipating this conflict is going to ease. Investors, however, are not psychics. They do not have any tea leaves or crystal balls, but just to give you a sense of what the markets are thinking right now.
Let's switch gears and talk about this crackdown that the White House has announced on junk fees in partnership with the FTC and the CFPB. What are those junk fees, and how will this help Americans?
Yeah, so this is actually something that the CFPB actually came out with last year in 2022. And they said, listen, right now, a lot of these banks are raking in billions of dollars from these junk fees. As you were mentioning, a lot of those are things like NSF fees, so insufficient fund fees. If you bounce a check, for example, a late fee, that's a junk fee. But also those junk fees, if you go to buy, Beyonce tickets or Taylor Swift tickets on, Ticketmaster, how many of us?
Those fees
exactly.
are insane.
How many of us go to buy a ticket,
like 50
a concert ticket?
And you're like, I don't even know what the
I just bought something the other day. It was $35. By the end, it was $50. But I go, where?
Absolutely. You didn't know that price was essentially going to be much different from the ticket price that you were seeing on the website. The White House also wants to crack down on some of those fees. And so you can expect to see those not necessarily go away, but you can definitely expect to see business be far more upfront with their pricing. And when at least it comes to those junk fees for the banks, we actually did see banks have to actually refund about $140 million back to consumers because they were hitting people with fees more than once. Fees to give you your paper statement that they never mailed, or they give you an insufficient fund fee more than once. Those had to be refunded, and some of those fees we definitely should be seeing drop off going forward.
Well, those insufficient fund fees are like, I don't know what they are, like $35 or something.
$30, $40.
If you don't have a lot of money in the bank, it's not going to help.
But also just those fees where if you drop below minimum threshold, that's like super annoying. Because you just, anyway.
Well, that's good. At least we'll know about them. They're not getting rid of them, but we'll know about them.
Some of those fees are definitely going away. A lot of the big banks have already gotten rid of them because they knew CFPB was actually coming for them. And so they said, you know what, we're going to get rid of them. We're going to preempt it. But some of those fees are going to drop off, or you're going to be far more aware of what they are.
All right, that's good. Kristin Myers, thank you very much.
Of course.